Hello and welcome everyone to this week's COT review, the first one in 2018. Of course, we're going to be analyzing the first COT report of 2018. So let's start with the S&P 500, where we had a 26% change in commercials positions. Huge change over there. Bearish, of course. And of course, we have to be very, very careful. We're talking about an index over here, and as you may see, there's a pretty big rally going on, and so caution is advised. Nevertheless, this is a bearish change signal that could push prices lower in the near term, meaning early next week. The extreme is pretty large and bearish, of course, as you may see on the chart right here. So commercials and large speculators both are towards their bearish extremes. So who knows whether we're going to eventually reach a top in indexes. That's the big question here. Let's move on and have a look at copper, where we have a 21% change in commercial positions. But you can see over here we have all-time COT extremes as well. We're going to talk about that later. But first, let's concentrate on the bearish change signal. You can see it over here, pretty large, much larger than average, suggesting prices should dip a little bit early next week. Jumping to the 5 years chart, you can see that it's showing us a huge extreme in the market. Stress levels have never been as high as they are right now. Large speculators are above 60,000 contracts net long. Commercials are above 60,000 contracts net short, and prices are high. So who knows? Who knows how higher they can go? Of course, I've told you this before many times in previous reviews that you have to be cautious with these signals. They do look beautiful, but they could be present in the market for many weeks before the market actually reacts. So it's just there. I mean, we should have our eyes on copper, that's for sure, because there's an bearish all-time COT extreme. Okay, next market, silver, with a 17% change in commercials positions. You can see that change over there. 18 in large speculators. Of course, this is a bearish COT change signal, and similarly to the copper and the S&P remarks I just said, we should expect the prices to dip early next week. But of course, we have to analyze the 5 years chart. And what's interesting to see here in silver is that the picture is not as bearish as it was in case of copper. You may, if you go back to copper, the chart of copper, we had them at an all-time extreme, while here we're actually closer to the bullish side of the market. That's interesting. Okay, let's move on and have a look at large speculator COT extreme. So we've got 3 markets on top of our list with all-time extremes. That is very nice. We don't see that quite often, actually. We talked about copper, so we're going to jump over that, but let's start with the euro and the 5 years chart. Here we go. So there's that bearish extreme, unquestionable, huge on this 5 years chart. Definitely, we've never seen anything like that, but it's there. It's an all-time COT extreme. So throughout the COT data history of the euro, we have never ever seen such a bearish positioning of traders as we have right now, which does not mean we're going to see prices fall, start falling next week. But it's a reminder that stress levels are high, and eventually we should expect some kind of a shift in that trend. So that's that. We talked about copper. We're going to jump that over, and let's talk a little bit about heating oil, where we have this all-time extreme. Again, we're talking about a bearish extreme. You may see the last one was actually bullish. A beautiful signal from mid-2017 when commercials went net long, large speculators went below the zero line net short, and that just pinpointed this bottom over here, and from there prices have just gone higher and higher. And as they did, traders started positioning themselves towards the bearish side of the market. Now, just a few weeks ago, we were actually very close to these levels, and you can see there wasn't a real effect on the market. So that just, signifies or stresses out the fact that we have to be careful with these all-time COT extremes. They don't necessarily shift the trend that fast, but it's it's definitely there, and it's giving us a very solid and exact signal that hey, prices have gone too high, and we should see a little bit of a rebound at least, or of course it could happen that we would go back into this bearish mode. And let's just move on to our next and last market for this review, which is Palladium with a 171 report extreme in large speculators. The exact same extreme can be visible in commercials as well. Well, it's not an all-time COT extreme, but it's definitely significant. So it's been more than 3 years since we've seen traders at such levels. It's a bearish extreme, and of course we're not surprised to see that, since prices are at these levels. Now, this would mean that this is our third metal market for this review that is giving us a bearish extreme. Actually, sorry, the second one, because silver, we had more of a bullish one actually, but that's the second one already, and we had a all-time bearish COT extreme in copper. So that's interesting. But that's all. I mean, I'm not going to give you more, of course, in these COT reviews. COT base is there for you to use. We have this analysis page where you can go deeper in analyzing the COT report. You can look at new report types, other data types, and of course, you can add the long-term trend indicator, the volume and open interest scores, the COT index, and spend a little bit more time on analyzing these markets and coming to a conclusion whether or not you want to trade one of these markets or not. Okay, that was all for this review. I hope you enjoyed it. I hope to see you next week. Have a great weekend. Take care. Goodbye.